The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, last day of October, last trading day, last day, Halloween, the works. We've got the Dow down 216 at 32,645. So Basil Chapman here, Tiger Technicians Hour. And what we anticipated, at least from our subscribers to my opening call, is that after this leg C forms a peak C, it doesn't tell you how high, but it does say in the Chapman Wave methodology that there should be a push above, even if it's just 0.1, above the high of the 28th, that's Friday, of 32,008, was that 89, 889.81, 0.82. If there's a peak C today, a lower high, anytime this week, there's a move 0.01 higher, starts the leg D. We've done everything that we were looking for in terms of being long, adding to the long, being aggressively long, taking a little bit off on Thursday, even though there was a fabulous pop-up on Friday. That's fine. It's all part of the business of money management. Left side, right side says where we went short, that was back the 22nd of August, using the DOG taking profits off all the way down, and then getting stopped out completely on Friday. Now we have to consider, do we go back into this one-to-one short? What do we do? I'm not even interested in that right now. First, we have to look at the up move to see if it's going to complete and how it completes after all. And I'll take just a little time to go through the whole panoply of what I'm looking at right here at the beginning of the week, which is basically the November 1st coming up tomorrow. It'll cover a lot of that, right? So monthly chart, so far, we've had an engulfing of the September ugly red candle. We went to a fractional low at 28,660 on the 13th. So we took out that left side low from right there, and that was in September. It looked like for a moment that we were going to make the low in September. No, we actually went down a tad lower. Now what we're looking at is basically, this is what I like to see as an engulfing candle. I want to see big candles, and I want to see a close above the previous high of whatever the bar is, and that would be the high of, let's go to this, I think 32,504. And right now we're at 32,654. We're very close. We might not even close there. That'll make a little bit of a problem just in terms of the way I deal with this kind of candle. All right, I don't even talk about that. Let's just move on. Chapman Wave inside track repellent zone for the Dow. Remember, I'm talking about the Dow, and I've been doing that for quite some time because the Dow is in a perfect eye of the storm right now. It has all the ingredients to be a leader. How long can that go for? I don't know, but when you've got cyclicals like a Caterpillar, even a GE, I'll put that in right now, acting so well, and the monthly chart looks terrible. Weekly chart's improving because it closed on a weekly basis above this arch high of 81.30 that was made on the week of the 19th of August, and a good close above that, hitting maybe 83s and then closing the week above that, somewhere in the low 82s even, would be a really good sign to say, hey, higher highs and higher lows. All of a sudden, that changes the game for a company like General Electric. Aircraft engines and other areas just being hammered. And, of course, this is a multi-something split. It was a $645 stock, and then it got a split. So we're looking at a whole bunch of things that are going on with G. But I'm pointing it out because how do you get a Caterpillar to be doing so well under these conditions? Gaps up and holds that gap. This is the third session above the gap, I would have to say, and above the Chapman Wave Inside Track Repellent Zone. And I like what I'm seeing just in terms of where it is right now at 10:11 a.m. Eastern Time on the 31st, last day of October, last trading day of October. All right, here we go. So the Dow on a daily basis has gone from a buy signal to a buy mode. It implies that it should go to at least a leg D and then a peak D, and then other things can happen. You've got a left side, right side price time match which says it can go all the way to the 3rd of November. 3rd of November would be a Thursday. In this is a different left side, right side price time match. So I look at bar symmetry, and over the decades, I've been able to pinpoint what I think is important in terms of where you can gauge the number of bars on the left and the number of bars to the right before it gets back to where it was. The first pattern was this peak A minus at 30,454 back in early October. That worked out perfectly to the day, actually, and it spiked on Friday above that resistance and hit the Chapman Wave Inside Wedge target resistance line, which just above it. Now it's a little under it. Then I used for the weekend, I said, okay, now I've got to modify that, and I went to this particular low at 28,715, and that is what I'm using for this left side, right side price time match to say the number of bars on the left should match the number of bars to the right from that particular point. So my midpoint is based on technical factors within the Chapman Wave methodology, but it is not, absolutely not, a symmetry of the low from the price point down to the low, giving an exact number of bars to the right or the upside down way. So in other words, I've used some license, and that's all I'm looking at. Also, in the weekly chart, look at this. You've gone right to the pink line right here for the inside track repellent zone, stalling right there. If at any point this week on a weekly basis, it'll be good, can get to 32,500s. That's a very important sign. But to get there, look what it has to do. Look at this. I've always looked at symmetry ever since I hand charted back in the day with engineering paper and pencil, rulers. So look at this. This rally has rallied much quicker to the resistance line. The gray lines are the resistance line. This here is just the measure of the move from the high that was made back about January the 7th, and then the rebound to the high that was made week of 22nd of April, pulls back, develops a trend line here. This is the Chapman Wave Inside Track Propellant Zone. Let's just put that in, make that green, and pulls back sharply to the line, holds it beautifully, and then reverses back up. I mean, these are techniques that I've developed over the years, techniques I show every day, and every time I'm even doing it. Look, even my work, 1 minute charts, doesn't matter. And I talk about symmetry. I talk about if you learn how to use Chapman Wave methodology and the Chapman Wave Inside, all these different techniques. Look, there's an instant restart at about 1 o'clock or 2 o'clock on Friday, and it makes what? It makes the Chapman Wave reversal, and you go E/A, F/B, G/C, goes to a D. That was the high, just at 5 o'clock on Friday, and then it started down. And look, it's holding the 200-period exponential moving average in the 10-minute chart. These are all techniques I discussed. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Dow's down 86, S&P's 22. Dow's still the strongest. So we're looking at, remember the Chapman wave methodology, we're always looking for identify the lowest low bar and then merely. I always say merely. It's not as easy as merely, but mostly it's pretty straightforward. You just count each successively higher bar, alphabetize them, uppercase on the way up, lowercase on the way down. The notation on the way up has much greater meaning than on the way down, although I like to have it on the way down. There we use other technical indicators. But on the upside, a buy signal that's upgraded to a buy mode should go to at least 4 higher peaks. Each peak is alphabetized sequentially, A, then B, then C, then D. At D, other things can happen. I'll show you that instant restart a little earlier on that went to the high on Friday at after hours, went to a D. But this is where you can get your sharpest pullback at the 4th highest peak, or you can go E, F, and G. You can recycle. It can even go to A, B, C, D again. All right, enough with that. Arches and cups. Sine wave movement. Around, back again, up, down, up, down. And look at this. We've got a peak F right here. The technicals are all fading. It starts to come. That's at 7:25 or 7:30 this morning. Comes down. Left side, right side price time match. It breaks it. It takes a little longer to break it. And then it pulls back. And it goes to a low in the 38.84 area. Tries to run. It goes to peak A, B, C, D, E, and F. Makes an arch formation. Look, arch, cup, arch, a second arch, a sort of a V-shaped cup, and then another arch that fails at a peak. B minus, that's one time that you can often see a failure in the Chapman wave when there's just like an 8:30 news event, or in this case, the market opened. At that moment, you can expect a very quick rally and then a failure. I call it the Eiffel Tower. Usually it goes straight up and straight down. This one took a little time, went to a peak B minus, over the 200-period moving average, plunged down, and went much lower. Then it formed that cup right here, and we've gone to a B. And there's enough of the technicals that are suggesting we went to it. Look, I chose this. I did this live. People saw me doing this during the break. I drew this, and I drew the inside wedge target resistance line. I drew the left side, right side price time match, and it got there in 2 bars early. But the 200-period moving average, this orange line, look at that resistance. Every day I come in and I say, how important is it? absolutely unimportant until you get closer. When the price gets close, it's like a magnet. It can reverse, it can really do a sine wave, move up and down between it, but it takes a little while before it can break decisively above if it's not repelled significantly. And yeah, it's trying to hold. Okay, so now let's go back to our story, because all of this pertains to exactly what we're talking about. So in this pattern, this rhythm of the moves to the upside within this is an expanding wedge, Chapman wave falling axe formation. It says that you can go all the way to December the 2nd on a weekly basis. I don't think so. I think that the steam, the amount of action going to the upside now says we might make a high-level consolidation here, and that's what I'm saying to subscribers. Our objective in our positions was to get to a D and then make a decision. So when the Dow we've got to a C, we've started to make some kind of decisions, but it's at D that we're going to have to decide. Do we go back into the DOG? Do we add to the upside? What exactly are the technicals saying? And that's what I wanted to do right now. Let me go through this again. And to show you, the Dow has gone all the way to a D in a fantastic move from 34,000. That was the S&P. Sorry, the S&P is 3491, and it goes to a high on Friday just over 3,900. It goes to 3905.42. And there's your left side, right side price time match. And it did that, and it's got the Chapman wave inside track. So this is where you expect resistance to be. But wait a minute. The stochastic is flat at 89%. What is negative here is the on-balance volume is just not giving me the signals that I want. The relative strength, this little gray line in the daily chart right here, that's good. So this is a consolidation of a fantastic move up. Wait a minute. You want everything. You can't have the general leading without the soldiers, without the troops. And that's what happened on Friday. We finally got the troops joining in, having a good day. So the S&P went to leg D. The QQQs are still way underneath the peak C, and that's at about 286 something, 284. Oh, 284.60. And here we are at 277. Not such a big deal, but at this particular, because of the pattern, my 136 rule, we've taken 3. This is the 4th day. So we've used up 1. We've used up 3 bars consolidation. Now it's already on the 4th. I'm thinking that this is where there might be some lagging, and we will see, because the MACD is under 80%, so it's 76% in the daily. I'm not even looking at the weekly, because this is still a terrible looking chart, same as the monthly. So we need to see the QQQ sometime this week. We've got 5 full days. I mean, today we're not even an hour into the first part of the day. I want to see a move above 284.60 for leg D. Not good enough. I want to see something that actually tackles this very ugly bar right here. This is the inverted Chapman wave Roman candle with a high of 293.95 and a low of 283.42. I want to see us get into that with the QQQs. Possible, but it needs to do it very soon. It can't hang around here for the 6th day, because then it has to re-trigger a whole new buy signal almost to get the power to move higher. IWM, a little bit different. Now look at the chart on the left. Look at this chart. Now keep your eye on that. And now, isn't that a superior chart? This is the IWM, the Russell 2000. The daily chart's I must say, it's kind of impressive. Even now, it's just down 58 cents at 182.57. Down 0.32%. The Dow is down 0.42, and the S&P is down 0.77. So this is holding very nicely. I would not be averse to start putting money into the iShares at some point if this holds a little longer. But that monthly chart is still ugly. The weekly chart needs a lot of work. I'm impressed with the daily, but many times before we've impressed with the daily, but then the daily fails. It's almost like I've been impressed with silver superior to gold, and yet they both came tumbling down. Both came tumbling down. So we're looking at 1643 down 1.5 in gold. We're looking at silver up. So the gold is down 0.09%. Silver is up 0.09%, up 0.018 at 19.16, but not a great pattern, but it is a peak B. And we did make that peak D. Remember, requisite is to always get you to at least a D for a buy mode. It did that under the 200-period moving average, didn't get close enough to have it treated as a magnet. Instead, it got repelled. And the weekly chart is still not all that pretty. DXY, which is the dollar is having a real good rally. It's up at the 14-period, black 14-period moving average right now. The technicals are not that great. And the 9-period moving average hasn't crossed positive. It's still negative. So this is purely a price bounce. It hasn't got the technicals. It's the price. And can this expanding cone continue, rising wedge? Can it continue at the 108 area? Well, that's a big question for the dollar. I'll do the euro and I'll do the yen when we return. Basil Chapman, Dow's down 160, S&P's down 32. In this consolidation day we've been anticipating, and we've got it. We'll be back in a moment.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So let's just do this. So the DXY, that's the dollar, is acting very nicely. It's now up 90 ticks. EUR, USD, that's the euro-dollar currency pair, made a peak C. It's pulled back quite sharply to the 14-period moving average, but the 9 is still above it, so that's a positive in the shorter term. You're looking at the USD, JPY, this is the yen, having a very, just like the dollar, having a good rally, but it did go underneath the rectangle low, and it's trying to come back. So my contention here is that international currencies, the big money, is still either getting into the dollar to try to get it to rally so they can short it, or whatever it is, it's helping the dollar. The dollar's moving up. That isn't necessarily why the market is pulling back, because what's your excuse for Friday when the dollar was up huge and the market is up huge? So this is just, I've said, and I said it on Friday, and I'm going to say it again, try to think of all these things separately because they are, in a certain sense, independent, and then they become unified with the market. And that's, let me go alphabetically, Bondi, Crudy, Dolly, Goldie, and Vixie. That's right. So that's bonds, crude oil, dollar, gold, and volatility index, the VIX, because they don't always work to complement what the tradition has been for a long time. We're in untraditional waters right now, and that's where you've got to think of it. I had a question about VNOM. VNOM, it's holding nicely here. It's trading at 33.46, up 36. This is Viper Energy Partners. Remember, because it's a partnership, I'm not sure this is natural gas or whatever it is, but if it's a partners, then probably some kind of a dividend is involved. I like this very much. Is it a little bit overbought? Yeah, it's a little bit overbought, but I think it should hold between $30.50 and maybe resistance in the 34s, maybe just the low 35s. So it's in a range. The weekly chart is still acting very well. So I like it. Normally when a stock gets to this particular point, I say, take a little bit off just as money management, and I'm not going to change that right now. Yes, it's getting close in the big rectangle formation that produces some kind of an arch and then a cup. Look, here you are. You've got yourself a huge rectangle between 23s and 35s starting back in, I think it was maybe June. And here's your cup, here's your arch, here's your cup, and maybe it's forming another arch, but it's in leg C in the weekly chart, and still the MACD is good, stochastic good at 84%. So it's the daily that says it's just a little bit toppy, and the monthly chart is saying, hey, I'm stuck in a rectangle with I would not be messing around with this unless you're a real short-term trader and unless you're looking at money management because you got in so nicely that you want to at least preserve good profits. So maybe take a little bit off, but I like it. So this is acting very well. VNOM is the symbol. Next question pertaining also to the oils. And I'm thinking the oils are in for, there's a real good chance that the oils, anything can happen in this environment, but I think the oils are in for a bit of some kind of just a topping resolution here. Oh, look at Exxon talking about topping resolution. ExxonMobil, multinational, making a new recovery high at 112.38. I think that's actually an all-time high because I drew in the left side high. 104.76 was the high in July of 2012. It's now nicely above, and I said this is probably having an alternate wave count, G/C, and even with, wow, this is really fabulous. But I've still got it as a leg D in the weekly chart. I mean, there's nothing to say. If you're in it, I've said for a long time, a stock like a Chevron or an ExxonMobil, these multinationals that just no matter what happens, just keep coming back. This thing goes down to $30 back in 2020. Here it is, almost 4 times higher. They just seem to do that. So the people who, I know some people that inherited the Exxon shares way back, and maybe 10, 15 years ago I'm talking about. And I remember at the time saying, I would not get out of this. I would just be holding it. But what you can do if you're like a little nervous at any point, maybe you take the dividend and you buy something else with the dividend. You could use the dividend in a different way. But keep the call because look at this. This is capital gains. It's fantastic. So, yes, it's actually, and I have got in a leg F in the daily. The on-balance volume is a little over, not a little, it's quite a lot overbought. But the stochastic's at 90% and the MACD is good. If you look at next week, yes, I did see that. I think I sent you a message, Ron. I have a feeling I did it during the update. I saw it late, EPD or ET. Hi, Basil. I'm trying to decide on EPD or ET to initiate a position. Thanks. So look, if you're looking at ET, a good stock for this Halloween, right? We're looking at ET is energy transfer, so LP. So I'm looking at this, and I've got exactly the same feeling as I have looking at this as almost all of the, I did this for subscribers on my overview on Saturday, my overview video for subscribers about an hour long. It was almost like a webinar. There was just so many things to go through. I don't think that you should be messing with this, but on a very short-term basis at 12.67, up 14 cents today, in leg E, I could give it an alternate count, but right now, and the monthly chart, the weekly chart's in leg, I'm calling this a leg E, breaking out to new recovery highs, leg E in the monthly. It looks terrific, but I think money management says, all right, if this has got a dividend, I would take just a little bit off as money management right now, and I'd plan to put it back. I don't know when the earnings come out, but maybe it'll dip because of earnings at any point, who knows. But at this particular stage, the whole area of 1230 to 1170 looks to me like really strong support. So you could say maybe I'm taking a little bit off, and I can put that back in at about 8% lower, and that means you've already got your overall new position. So a new position, that's different. I'm sorry, I shouldn't have done that. A new position says if you put it in here at 1267 and you're holding it long enough to get the dividend, you could add that dividend to a stop. My preference, it's holding so nicely, and it's I do see, look, if you go to crude oil, they don't relate exactly, but I'm looking to crude oil, I'm saying crude oil's in that resistance area, and it's making lower lows and lower highs for months since the high that was made back in June. And that wasn't the high. That high was back in February, I think. So I'm looking at this and thinking, well, consolidation. But anything can happen. Look what happened to wheat. That's wheat. Look at this. Wheat is tootling along at 832, in the 820s on Friday. Suddenly there's this news, now I can't remember the news, but the news comes out, and wheat has this, that's right, about grains being, about Putin talking about the grains holding back. So now all of a sudden it's up 54 3/4 at 883. So that's the reason why I've said I want to keep holding our DBA, which is our DB Agricultural Fund, because anything can happen in that area. But it might just be transitory. It might be these sudden spikes and then it just goes back. And I had said on my subscribers on my video to the opening call on Saturday that there's a chance that maybe we're looking at the commodities starting slowly to be pulling back, even with some spikes to the upside. And although the companies, the companies that use grains, etc., for their products in the supermarket are always very slow to lower the price, maybe we'll see the lower prices. Maybe that's going to help the Fed make decisions. I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, so a question, I didn't finish the question, I'm sorry. It was a choice of EPD or ET. I think at $25, which is double the price, I'm not looking at the price so much, I'm looking at the chart formations. I like the fact that ET is already done. So this has also gone from a low in the 22s and it's gone to a, ooh, that's close. Is that 1 penny difference? Let me just check. That's 25.16, 25.16. Nope. So this is going to B and then a C and it started to pull back. To tell you what I'm looking at visually, and if you're only listening on the radio, one has made a high in the 28s earlier in the year, slumped to the 23s, then ran up in an arch formation and come back again. That is EPD, which is Enterprise Products Partners, is midstream natural gas liquids. But ET, the one that I was discussing earlier, energy transfer, I think it also looks like it could be natural gas, has already made recovery highs. I prefer this as a chart pattern, even though it's half the price. I think in terms of the, let me just draw this here to make sure that I'm drawing trend lines correctly. Yeah, I think that this one is, I like it better. All right, so you asked me which one, I like this one better. So because it's already had such a big move, the best is just to start your position, just a small position at 1266. If it goes high, I bet. Nah, I'm not usually a betting man. So I would say that visually, at some point, even if you got in now and it ran away to the upside, at some point, I think the 1220 to 1180 area is going to be hit and you'll be able to have another chance. At that point, it might be on its way down. But I'm just going to say start your position here. In this case, I'm not going to say just start your position. I'm going to say I would make it a little bit smaller than a starter position and a little bit more than a nibble. So in other words, get your foot in the door. But your idea is, because it's got endurance, and I'm going to go to XLE now because the questions have been coming in about energy. They all have pretty much the same patterns. XLE is the S&P Select Energy Spider Fund. 93.31 was the high back in June. Today its high is 91.18. So it's like less than 2.5 points away from the resistance area. So I'm anticipating at some point really soon we just start to see profit taking, and that's all I would call it in the energy sector. The technicals are still so strong. So yes, I do like it. What was the question here about the XLE? Whoops, where did it go? I think it was just a question of could I do about the XLE continues upward, or do you expect a consolidation? You know, once it gets to this area here, now Exxon went way above the left side to make what I could call a double top. In fact, a whole session I had today, maybe I'll still get to it, on what I wanted to show you of double tops and double bottoms to within pennies sometimes. So I'm thinking that this is it's only in leg C in the weekly chart. I wouldn't get too carried away by thinking, oh, big move down, but a consolidation, yes. So XLE, leg E could be an instant restart. I don't want to go there yet. Technicals are all good, but on balance volume says a little bit overbought. And that's all I'm saying. So I'm not looking, I would not be thinking shorts at this particular time in the whole energy sector. But the question was, where is it? And I think XLE is a little further to go to the upside, and then some kind of a consolidation. And a lot of these stocks are looking like that. Now, let me just do this. I did that. Yeah, you've got here GT XPEV. Look at this. Just when things go down, especially in China, they just keep going down and down and down. This is Xpeng, I think. I don't know how you pronounce it. XPENG Inc. Now, X sometimes is a Xpeng. I don't know whether how you say it, but this is trading at $6.72, down 17 cents, almost testing the bottom. The technicals were improving to say that this should not have pulled back this far, but look at this. Lower lows and lower highs just about every single week since July. I mean, this is not a good-looking chart, so I'd be real careful. I'm not sure what the question is, but I've got it here and I don't like it. Okay, next thing is Moz. Yeah, so this is the Mosaic company. Look at this nice move, goes to a leg E in the daily chart, the weekly chart. It's improving, but it's not looking great, and the monthly chart is still pretty ugly. So this is just saying these are areas that have momentary buys, and then they seem to fail. When do they kick in with much bigger moves to the upside? I'm watching this closely because I really do think that there's a chance that the commodities and oil could pull back if there's going to be a much bigger move in the general market at any point, and it has to be any point soon. So a couple of things that I want you to look at here. I got that. I've looked at that. Okay. So let me just show you something here. G, but it's 48.19, down 33 cents. This is Genpact Limited, manages risk and compliance. So what was my point? Oh, the point was, how does it handle the weekly chart, which actually I've got this as a C minus. No, it's not a C minus, it's a C. The high that was made, Genpact manages risk and compliance, had a fabulous move from the 42 level on some bad news, and then it closed the candle beautifully up on around about the 13th of October, like almost everything else. It's gone to a leg B. And look at this. The high that was made at 48.81 the week of the 19th, our high on last week was 48.67. So these double tops have significance, and we're going to be watching them closely. What I want you to say is I didn't do this because I almost forgot about natural gas is having a real nice move today. It's up 54 cents at 6.23. If you look at the UNG, it kind of gapped up. It's holding that gap up. So is this really United States Natural Gas Fund? Are we about to see, have those natural gas funds, the natural gas stocks, gone up without natural gas moving higher? And now that they go, if natural gas actually starts to move, are they just beginning their move to the upside? Is this a multi-decade or no? Let's talk about a multi-month and then a multi-year move to the upside in natural gas. We're going to find out pretty soon. So that's the reason why I'm saying get your foot in the door in the stock, but don't get too carried away because it's extended, but prepare for those pullbacks, and that's when you want to add, because it looks to me like natural gas is attempting to find this double bottom, and that was really the purpose of what I wanted to show you was all these stocks. Look, natural gas, can I do that? Look at the way it hit the top. Now, this is a continuous contract, so my notation is in a different place. But the natural gas continuous contract went to a high of 10.292. 10.2, let's call it 10.30. Back in the week of the 10th of June. 10.30. And look at this. It goes to 10.42. 10.71 the week of the 26th of August, but it doesn't close above that left side high. So these are very significant. Keep in mind that you can use some very simple techniques to be able to decipher. Look at Honeywell. Honeywell, look at this, 167.35, the low in July. Huge move up into the 200s, comes back, and what is the test in October? 166.63, and now it's breaking out. How does that happen? How does the stock even know that it can go to within pennies? I'll be back. Dow's down 148.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Symmetry that I was showing you earlier on. Look at the symmetry here. Look at this. I drew the rectangle in because these sideways moves, they can cost you a fortune if you don't identify that at the low, they're pretty much going to turn of the trend line, and at the high, they're going to turn down, because you think they're going to break out or break down. In fact, they stay in the rectangle for, a lot longer than your patience. Look at the symmetry of this W formation here, the little miniature one, to the huge W formation here. Look at the price movement in either the E-mini 1 minute chart. Look at that exact right there. And now we've got almost exact to the peak C, but it's lower than the peak B. These are all techniques that you can use. Simple stuff. I mean, there's nothing complicated at all about it. So now let's go back here. This is our final segment. So BTU, I don't like the BTU right now at all. BTU is Peabody Energy. It's not acting as well as the others. This is not natural gas, maybe it's one of the other, maybe it's oil or something. Whatever it is, it's just not acting well. If it can close above, it's at 24.11. If it can close above 25.83-ish. Sometime this week it says good, it can fill in this ugly candle, but if it pulls back and it breaks under 22.30, the 22 to 21.44 200 period moving average is the target. Okay, let's just do this real quickly. I didn't get to it, but I'll do it right now. Oh, I had like 200 things to do today. Anyway, it doesn't matter. People ask questions. I like to answer them. So what did I say on Friday? Watch out to see if the VIX index touches the 200 period moving average of 25.93. It was 91, I think. No, it was just a little above that. Now it's at 25.93. We hit that Friday. There's a little bit of a bounce today, up 82 cents. I still think that the VIX index, look, here it is in the weekly chart, is telling us how it holds this particular uptrend line, the Chapman Wave Inside Track Propellant Zone, all the way through Friday. That, for me, is going to be the big clue as to what happens in November. Have a wonderful session. Check out my opening call. We've had some real nice positions. And stay tuned for Steve Rhodes and great programming here all day. Be back tomorrow. Have a great